Time bomb. Okay?
Okay.
Okay, you guys ready? Here we go. Welcome. You're listening to the Best of Investing on Talk 910, the show where we present valuable information about real estate. And oh boy, we're going to talk about real estate today. The financial markets and other economic business of the day. I'm your host, Edward Brown. I'm proud to have as my co-host Mark Hanf of Pacific Private Money, California's fastest growing mortgage investment firm. Our phone number is 888-912-1190. Write that number down, 888-912-1190, because you're going to use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. Now, the vacations are not sponsored by the radio station, but by Lighthouse Resort and Marina, which is located 1 hour northeast of San Francisco. The vacations are free. Their only request, a $75 cleaning fee to cover housekeeping expenses. Such a deal. Their website is lighthouse4fun.com. You can reach them at 916-777-5511. And today's trivia theme is pirate stuff. So it's going to give you
Pirates!
Pirates! Stuff about pirates. Our website is bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show. And if you happen to be watching Comcast Channel 26 or AT&T 99, that's Saturdays at noon, Sundays at 6 p.m., you'll see us there too. This segment of the Best of Investing is brought to you by Crystal Bull, not Crystal Ball, but crystalbull.com. And if you ever wonder why the stock market has big ups or downs, when new economic data are released, check them out. They show these relationships graphically. It's crystalbull, BULL.com. Today we have a very special guest because you know what? It's April 5th. And when I say April 10th, what do you think of, Mark?
Property taxes.
There you go. Well, we have Richard Benson, who is the Marin Tax Assessor, with us. Richard, welcome to
Thank
Best
you.
of Investing.
Thank you, Edward, for having me here. Thank you, Mark.
All right, so Mark, go ahead and
Well,
Take it away.
we invited Richard on the show today because there is a ticking time bomb out there for owners of real estate who took advantage of Prop 8 and had their assessments reduced in 2008 or 9 or 10 or whenever you might have done it to, for the fact that in, many counties all over the Bay Area, we suffered a significant drop, and we did so, of course, here in Marin County. And so Richard's going to talk a little bit about what's happening in Marin, because that's the area of expertise that he has. But there are some facets of Prop 8 that I think most people were aware of, but maybe aren't really prepared for the sticker shock, the potential sticker shock of future tax bills now that real estate is back to appreciating rapidly. So, Richard, we were talking about off the air a little bit about the change in valuations, and can you talk a little about the effect of Prop 8 and the recent run-up in appreciation that we've experienced in the last year and a half?
Well, Mark, that is a fantastic question, especially especially since December of 2007, when we really experienced the economic downturn in the real estate market. And in the last 18 months, guess what? We're on the same slope upward that we were prior to December of 2007. If you look at things like the Case-Shiller Index and some of these other economic indicators, they follow pretty closely in Marin County and the other Bay Area counties, the coastal counties, to what's happening. So what we're seeing in the last 18 months or so is some pretty dramatic increases. Now, what does that mean when we talk about Prop 13 and property taxes? Well, it means if you purchased a property in, say, the peak of the market, maybe the end of 2007, and then you had your property taxes reduced, maybe by 20% or something of that nature, what happens now? Suppose for the last 4 or 5 years you haven't had an increase in your property taxes. It's just kind of been static. Well, it can go back up to what your purchase price was.
see, I think that's where a lot of people have a misconception that they think, well, Prop 13 says it can only go up 2% a year, but that's 2% from where you originally purchased it. So Prop 8, if I understand it correctly, got reduced, let's say 20%. It doesn't necessarily have to just go up 2% a year from that low point.
That's exactly right. As a matter of fact, it can go up more than 2% in any given year if it's been in that reduced status. It's only when it gets back up to its original trending line, its Prop 13 base year, that it goes back on to being limited to 2% a year.
So there, as Mark says, there's it sounds like a ticking time bomb happening, and why is that?
Well, and Richard, you were explaining to us, get off the air, you were showing us your graph, which of course we can't share with our radio audience here. But we took $1 million home that if, and let's say $1 million at the peak before the real estate downturn, and over the last 5 years had that, well, actually, I guess it was 7 years, if it had trended up at 2% per year, you came up with a number of, well, your tax assessment would now be somewhere around $1,070,000. Now, that number is important because if you, back in, say, 2008, were able to successfully get your tax assessment reduced to $800,000, well, the difference between $800,000 and $1,071,000, that's about a 34% difference. And so what is explain how Prop 8, the hidden feature of Prop 8 that, what is it that actually, are there any caps to how much that can actually increase year over year to kind of catch up again with what it would have been had they not gotten that?
Well, no, that's what he's saying, right? Is
Yeah,
that
so
you could theoretically
Could it
go
actually
right
go
back up.
34%?
If the market appreciation was 34% in 1 year, it could go up that much in 1 year. That's all embedded in the Constitution. When Prop 13 was passed, that said, once that person establishes a base year with, let's say, their sales price, their acquisition value, then the assessor assesses it at whichever is less, the factored Prop 13 base year or its market value. So if the market value goes down and stays down for a while, it has to catch back up to where that factored Prop 13 value was. Once it gets there, it can't go beyond that. But that could happen in a year, it could happen over the course of time. And what's interesting today is nobody really expected that the market would go up as much as it has in the last 2 years.
Well, and I'm going to guess that it's not cumulative. So that, let's say it went from $1 million down to 800,000 and stayed there for, let's just say 10 years. Okay. Then the next year it super skyrocket. All it could do would be to go up to the million first, and then 2% a year after that, right? I mean, you don't take 2% per year times the million and go, well, in 10 years it could go 20% above that to $1.2 million in 1
It could
year.
go up to $1.2 million. It could go up that 20%. If you took 20% off it, right? You think about that. If you took 20% off, then that $1 million is compounding at the rate, theoretically, of 2% a year.
Wow. So
Okay.
even though they're at 800,000, as soon as, let's say, the market goes absolutely
In that last
skyrocketing
year.
in the last year, it could actually go to $1.2 million
Correct.
in 1 year.
Correct.
Oh my goodness! I thought maybe it would go back to the million and then start from there. Oh my!
So the dirty little secret is that
Who do we write to our congressman about that one?
So what's really important is that people have time between now and next fall's tax payments to think about what's their liability. Look at your tax bill now. Now in Marin County, when we publish the tax bills and we send out notices, which we'll be doing by July 1st this year, anybody that's in that status, we tell them what their assessed value is and their potential Prop 13 value. Okay?
Okay, so they know
So
ahead of time that
They know what that difference is.
Wow.
And so there's time to kind of prepare for that before that tax bill is
So if
due.
we see the tax collector with a new car, can we kind of assume that? No, just kidding.
So Richard, are you expecting pitchforks and
Exactly.
angry public? I'm going to guess that there's going to be an awful lot of people contacting your office saying, "Wait a minute, something's wrong here.
Yeah.
My taxes can't possibly increase that much," because I would bet there's very little understanding about how the
I'm sure there is.
mechanics of how Prop 8 was actually designed to work.
Well, that's why I'm here. It's part of to give some education to the public and let them know how this process works so there aren't surprises. So it's really important for our office to get out there in the paper and in the media and make sure we have that information to the public.
Okay, stay with us, Richard Benson, the Marin Tax Assessor. We're going to cut to our first commercial break. First trivia question. Again, the theme is pirate stuff. What colors are the pirate flag, the Jolly Roger? The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. What colors are the pirate flag, the Jolly Roger? 888-912-1190. Make sure to include your name and your email address. Speak slowly. Spell out your email one letter at a time. Don't touch that dial. When we come back, we've got some very interesting questions that I know the audience is going to want to hear. Good. That's good.
Yeah, we've been doing this now for over 3.5 years.
Yeah.
How often do you come on? Are you
Every
He's
week.
on
every week?
Yeah, I've been on every
awesome.
show
He's a
since
co-host.
August of
That's
2010.
That's
it.
perfect.
Yeah.
We work good together.
You know, and what happens here is it's this part that's screwing up, but
Right,
this is
the
perfect.
record
Which
is
is the
fine.
important.
It's just kind of
That's the
annoying,
important
but
part.
It's
yeah.
important, but it's
Just
annoying.
gonna ignore that. That's
Yeah.
okay.
Seems to, whatever you did, it seems to be less. So,
Does it?
so it
Okay.
seems to be okay.
All right, so let's save this file here.
Roger, I don't know that I know that color.
And the email question we have for you, Mark, is what happens if a borrower in one of the loans you fund goes bankrupt? So a loan that's in the fund.
So I might want to just come out and in the second segment, if you want to get started, I can just say we've been talking about the catch-up provision that most people are unaware of in property tax. I think it's important enough that it might be worth
Absolutely.
talking about again and preparing for it and talking about, I can ask you, like, have any of the counties talked about any, payment plan in anticipation of maybe consumer
Well,
difficulty? in
that's a
paying these
terrific
instead
question
Yeah,
because
and
you know what an impound account is?
Yeah.
So on some mortgages, the impound account is already increasing that in anticipation of that.
Oh, okay.
Some lenders are already doing that.
And then what happens? We talk about a little bit about the penalties, and the interest is like 18%, I think.
That's
It's marked on private money,
That's right.
loan money.
Predatory lending.
Predatory lending. Yeah, exactly.
That's not a good loan to take out.
No,
Now,
no,
another thing
property
that you
taxes.
guys might think about is, let's just see here. I'm just trying to think, what we want to make sure is, are those people that may be homeowners, do they have a homeowner's exemption? Have they checked their assessment?
It's only 7,000
It's
now.
only 7,000, but, little bits, whatever they can do,
That's true.
small stuff.
I just wish that there weren't all these extra things on it, which Oakland is just. Do you know that
It's like 1.3 now or something.
No, I paid 1.75%.
What?
Because there's mosquito abatement,
Sure.
and there's crime this, and there's crime that, and there's crime this, and
I had no
it's
idea. Oh my
terrible.
God.
Yeah, it's really, really bad. Okay, here we go. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hunt, president of Pacific Private Money, California's fastest growing private mortgage investment firm. When we cut to the first commercial break, we asked this trivia question: what colors are the pirate flag, the Jolly Roger?
Black and white,
That is correct.
which aren't colors.
Yeah, one's the
Trick
opposite of
question.
color. And
There are no colors.
That's no, but that's what we're looking for is black and white. We are in the studio here with Richard Benson, who is the Marin Tax Assessor. We're privileged to have you in the studio here, especially since I got to think April 5th, of course, this is a Saturday, so you're not too busy, but April 10th is coming around. I can imagine you can only be so available.
It's coming around, and people are already showing up in our offices asking questions and starting short lines, and so we encourage people to come in early. Another thing to think about that happens sometimes when we get right on the 10th is that people wait until the last day to send in their taxes, and so what happens is if it doesn't get into the tax collector in time, it could incur a late payment. So it's important to get it in timely enough, so even if you want to check it, you can make sure, did they get it in time?
So remind all of us what the penalty and interest is for not paying on time.
Well, the penalty is 10%, so it's a
10%.
significant number.
And that's just the penalty.
That's the penalty.
And what's
then
the interest?
I'm not sure exactly, but as
If
you suggest, it might be
I think it's 18%.
I think it's 1.5% per month.
I
think that's right.
I think Congress needs to get involved because that's predatory lending. They're going to throw people out.
I don't even charge that much.
Yeah, I know exactly.
We like to think of it as an incentive.
Yeah, it
Yes.
is. Well, the funny thing is, if I were to ask you really quickly, Mark, when are taxes due? Real estate taxes.
April 10th.
No, they're actually due February 1st. It says right on there, it's due February 1st, but it's
Payable,
late
yeah.
if not received by
Delinquent
April.
by,
April
right.
10th,
You get
yeah.
a grace period.
I'll tell
Exactly.
you the best acronym for that I've ever heard. Maybe you've heard it, maybe you haven't. It's when it comes to property taxes, there's no darn fooling around, which means it's due in November, it's delinquent in December, it's due in February, and it's delinquent in April. So there's no darn fooling around when it comes to property taxes.
I haven't heard that. Now it's going to stick in my mind.
So in the last segment, we were talking about the catch-up provision, which I think most of the public are unaware of. So those of you who took advantage of Prop 8 and had your assessments reduced, the assessed value of your home going forward can accelerate due to this catch-up provision. And it's possible that if you live in an area where, well, if two things happen. One, you did take advantage, you did get your property reassessed, and maybe you got your assessment reduced by 20%.
Which, by the way, let me just interrupt for a second. In some cases, the homeowner didn't actually have to be proactive. Sometimes the assessor just went ahead and just did it across the board.
Absolutely. We did in Marin County, and frankly, I think most counties in California did that.
Yeah, absolutely.
Yeah, you look like the good guy. Go ahead.
But so the catch-up provision is that if you did take advantage of that, or if it was done for you by the county, and you live in an area where there's been significant appreciation in like many Bay Area communities around here, you can be in for a little bit of sticker shock when you get your notice of new assessed value in the proposed rate. That's going to hit you effective in the next two payments, December of 2014 and April of 2015.
Yeah. Can you imagine all the people who are going to call and say, wait a minute, Prop 8 or Prop 13 says da 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 da, and then you guys are going to have to explain, well, wait a minute.
Sure, we're going to get lots of calls about people who say, I thought Prop 13 limited it to 2% a year. What happened with this? And when we look back over time since Prop 13 began, there's only been a couple of small periods of time where this kind of economic scenario has happened, where property values went down. And in fact, when they did, it was a very small dip.
Yeah. So,
most people that are probably in this setting of this dramatic reduction, and then as the market begins to appreciate, haven't been exposed to that.
Well, and also there are a lot of people who, let's say older people who had purchased their houses in the 1970s, they never even saw a reduction because their house was valued at $60,000, and it's just been slowly going up. So when the market dropped, the thing is their house, now it's assessed at $100,000. Well, the property's still worth $250,000 or $400,000 or $500,000. So they never got the properties reduced. They've just been marching along, having a 2% increase, right?
Absolutely, and that's why it's important to look at a tax bill to see, is your taxable amount the same as your Prop 13 amount? Or call the assessor and find out. That way and certainly we don't want to put fear into people who are not going to be affected with this, that, their assessment isn't going to change dramatically. Turns out it's about 25% of all the assessments, varying from small reduction to something rather substantial.
Okay, and what is the deadline for people who say they get this notice and they say, wait a minute, there's no way that my property has increased that much. What is the deadline, and what would you recommend? How would they get their taxes?
Boy, is that a great question.
Thank
So
you.
the first thing to do is to, call the assessor and ask. That's the simplest.
What's your home phone number? Just kidding.
So they can call us, and the other thing is this information will be on all their notices. So there'll be a phone number there and a contact person. That'll all be provided when they get this notice in the mail. But, there's two tracks. One is an informal one and one is a formal one. So the informal one, what we call a request for a review, people can ask for that from July 2nd through October 31st this year. And a formal appeal is something where you're still not happy, or maybe it's an issue that you can't resolve with the assessor and you want to go before an independent body to have them review it.
What are the percentages of it going that far?
Not very many.
Okay. It's sort of like the IRS, where you usually, before it goes to appeals, you can usually agree with the IRS officer or their supervisor.
Absolutely correct. Most of them never get to the appeals board itself. But that filing period is important. It's July 2nd through November 30th. So it's a little longer than the request for review period in Marin County. Now, it's important for listeners to remember to check for that in every county, because every county can be different in California.
Well, you had a really good
So if I get my tax bill for next year and I see it's gone up significantly, and even notwithstanding maybe any appeals process I might go through, are there any payment plan provisions that are part of this, or is it still you just have to find a way to pay the 50% come December and come.
There's no change in that, although there can be a provision where, if there's a change as a result at any time during the course of a review or an appeal, somebody gets a value adjusted, well, then they'll get a refund on their payment. So it's important to make that payment, because if there is an adjustment for one reason or another, you will get a refund.
And so we were saying off the air that you thought that many financial institutions have already taken into consideration an increased valuation and have given some people on their impound accounts notification. I've not seen that actually happen, and haven't heard anybody who that's happened to, but it sounds to me that's going to be.
I haven't heard how many, but I have heard it across our public counter that is happening in some cases.
Well, yeah, if the bank is taking an impound account, they got to make sure that they collect enough money ahead of time.
Absolutely,
because the thing is, if I'm the homeowner and I have an impound account, if the bank doesn't tell me, I'm just going to make my regular mortgage payment, and if for some reason there's a penalty, I'm going to stick it to the bank. I'm going to tell the bank, hey, that's your problem.
Well,
obviously they'll get the money from me, but not the penalty.
Well, of course, most people have the impound account. What happens is the bank actually makes the payment for you. So, and what's even worse is, so the bank gets notification in July of the new assessed value. They're not going to make an appeal on your behalf. They're just going to go ahead and arbitrarily calculate what that new payment is going to need to be in order for you to in order for them to have collected enough money from you in order to make that payment December 10th. So really, those of us that have impound accounts on our mortgages, it's going to be a little bit of a rude awakening.
Can be. That's why it's important to prepare for this. This is, as I say, this is at least since '75, but probably when we look at the statistical characteristics of how housing market is appreciated in California since the 50s or 60s, we've never seen an activity like this where it went up and went down so dramatically. So something new for people to think about.
Yeah, and I know that we're going to cut to another commercial break. When we come back, I also want to ask a quick question about commercial property, because there's kind of a big push for getting rid of Prop 13 on commercial property. Because you deal with that too, right?
Absolutely.
You're the assessor for everything. They don't split residential and commercial.
Everything from boats to aircraft.
Oh, there you go. Okay. Yeah, Mark, did you pay the taxes on your aircraft carrier yet?
Yes, I did.
Yes, and on your jet stream. Okay. The second commercial break trivia question. Again, the theme is pirate stuff. Long John Silver, the one-legged pirate, first appeared in what tale? The first three callers with the correct answer. Mark's looking up and to the left. That's actually a good way to be thinking. I don't know if you know that. But your brain works better if you look up and to the left. Something about the left brain. The first three callers with the correct answer won a free 3-day, 2-night stay at the Lighthouse Resort. Their website, check them out. Lighthouse4fun.com. The weather is getting good again. Call 888-912-1190. That's 888-912-1190 to answer this question. Long John Silver, the one-legged pirate, first appeared in what tale? 888-912-1190. Make sure to include your name and your email address. Speak slowly. Spell out your email one letter at a time. Don't touch that dial. The best of investing. We'll be right back. Good segments, guys.
Yeah, this is fun. I like radio.
Yeah.
I like radio better than video.
Yeah.
If you watch, if you've done video,
I have.
it's always in your face.
Yeah.
So you're always seeing the light, and then don't look at the camera, right?
Yeah.
There's the light, so you're always kind of conscious about it here. But here, you can just kind of relax.
Just kind of
it's
be
nice.
yourself.
It's a lot of fun.
So what was the other question you had? I went
about commercial.
Commercial,
Yeah, the
that's
split
right.
roll. What's called the split roll, right?
Oh.
It's called the split roll when we think about how they might segment Prop 13 to say commercial property will be assessed either at a different rate. And currently, the way the thought process is, it's going to get assessed like every year.
Yeah.
Wow.
And then, the real trick here is that you have novices looking at this and saying, well, this is a good idea,
Yeah.
right? But you know what? The devil's in the detail.
Yeah.
Yeah. Because, you can have it at market rate, but the tax rate is only 100%. So have you gained anything? So it's really about, what happens and what the same condition happened just before Prop 13 effect is.
Okay, let's.
Yeah.
You're just saying good stuff.
Okay.
See if that happens. All right. Good. Here we go. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hoff, president of Pacific Private Money. When we cut to the second commercial break, we asked this trivia question. Again, the theme is pirate stuff. Long John Silver, the one-legged pirate, first appeared in what tale? And it was not Snow White. Treasure Island.
Oh, yeah.
Treasure Island.
Should have known that.
Okay.
So we have Richard Benson, the tax assessor for Marin County here, because April 10th is coming up, and a lot of people are going to be scrambling to pay their taxes. One question I had was, I've read recently there's been a pushback on Prop 13 for commercial property. It's sort of like renters, they all kind of, yeah, stick it to the landlord type of thing, not realizing that, gee, your rent's going to go up. What do you heard, or what's going on with commercial property?
I think the basis of that stems from one of the primary reassessment triggers with Prop 13 is that property gets reassessed when there's a change in ownership.
Yeah.
So an entity like a corporation or maybe a partnership or something of that nature may not get reassessed for decades or however long because there's no real technical trigger on a change in ownership like in a corporation. So, people look at that sometimes and think, well, that's not equitable because, people that are not corporations, they don't live forever. They go through changes in ownership and they get reassessed when they purchase a new house. So maybe they think that's not fair. So, over the last several years, we've seen some interest in trying to create a separate assessment role or assessment pattern for commercial property, industrial property, and regular residential property.
So that, and you refer to that as the split roll, right? Where they look at commercial property differently than residential property. Would there be any different way of evaluating or process of evaluating commercial property if this, at least under the terms in which they're talking about potentially making these changes?
Sure, that's where the devil's in the details. We really don't know, what that might be until the legislature figures out, well, what are the terms of this deal? And that's yet to be seen. One of the ideas would be to assess one segment or commercial properties at market value at maybe some different tax rate, and then that happens year after year compared to somebody who's on the traditional Prop 13 type structure.
I understand when people discuss the inherent unfairness. You got two apartment buildings right next to each other, and one's assessed at several million, and the other's assessed at 20 million. I mean, it's just, how is that fair? And how can the person who just bought that one apartment building compete in rents? He's making less money than the guy next to him. So there's a lot of inequity. But I also recall and have read recently what's happening in other states where property taxes have been shooting up and going up in record numbers. I don't think anybody wants to see California go back to those of us old enough to remember what was happening in the 70s, where just taxes were just going up year after year after year to pay for a bloating government payroll.
Exactly. Well, and no offense to Richard, because it all doesn't go to him. But I always thought about that too. It's like someone's been living in their house for a really long time, and it doesn't matter whether they're wealthy or poor. Prop 13 is basically says the value can only go up 2% a year, and then you get a new family coming in next door, and they're just too high. And so the attitude is, for me, it's like, well, don't raise their taxes, just lower mine.
Right. And that issue went to the U.S. Supreme Court, and they said, well, basically, the equity there or the fairness is that everybody knows what the deal is.
Yeah.
So that way, that's why it is. Now, when we went back and looked at what happened when Prop 13 came into effect, people said, well, you know what? I can't afford to live here anymore because of property taxes. And now, you know what they say? They say, I can't afford to move. So what's happened is we've kind of flipped the equation a little bit, and sometimes I think about it like kind of like introducing a different species into the environment that's an exotic. It's like, when we fool around with the natural economic setting, what happens? And sometimes you get results that you didn't really predict. And that happens a little bit even with Prop 13.
But back in, what was it, 76?
75.
75. Everyone started at that level. It's only when things went crazy and then new people purchasing their homes, there were not that many $1 million houses.
And at that time, people bought property not for investments; they bought it to live in. So in reality, when you look back at those appreciation rates, they went up pretty steady at 4 or 5% a year. It was like a savings account.
Yeah.
And then people realize that, you know what? This savings account looks pretty good. I can either rent it or I can resell it.
Yep.
The flipping became popular. People started buying and selling real estate as investment properties as opposed to just living in them.
Well, the government has maintained, of course, the mortgage interest rate deduction, and so that's in favor to help people to be able to actually afford to buy homes, because then you can write off that interest. That part of it helps to offset a little bit what you were talking about earlier. People say, well, I can't afford to move. So, they've really, there's so many tax implications on both sides when it comes to real estate right now. And certainly, Prop 13 and property taxes and this catch-up provision of Prop 8 that we've been talking about, it makes for an interesting mix, and I don't know how much all of that impacts what's going to happen in the real estate market going forward, because all of us would like to know, well, our real estate, are we going to see another double-digit year in 14, or, it's just but add it to the mix of all of the variables that impact real estate, and just goes to show you why it's so difficult to predict what real estate's going to do in the future.
For commercial property, it's a major factor, because if you get somebody who has owned a property for a really long time and the value's low, but then when they want to sell the property, the new buyer has to take on that new basis, and the property taxes on that new basis are a lot higher. And when you start figuring out cap rates and all that, you're talking maybe potentially hundreds of thousands of dollars difference in value.
Right. And all commercial appraisals take that into effect. In other words, when you get a commercial appraisal on your commercial building, it appraises it as if you were paying market rate property taxes. You might be paying $10,000 a year, but if market rate is $50,000 a year, that becomes the operating expense used to determine the operating income, and thus with the cap rate, with the values.
It's the same thing with vacancy rates. That the seller says, well, it's
I have
never
no
vacant.
yeah,
I
right,
have
so
no
zero.
vacancy.
Right,
No. You always have to assume at least 5%, or
Right.
usually 5%.
Absolutely.
So, Richard, we're going to be going to a commercial break fairly soon here. Any last words of wisdom to our listeners?
Well, don't forget to pay your taxes. That's the most important thing. That's why we're here. Pay attention to what's happening. Don't ignore the real estate market and property taxes when we've been in such a volatile type period. Ask questions if you have them, and we're here to help.
Are you expecting record collections this year, or not quite yet?
The assessment roll for Marin County will be the highest it's ever been. Probably over $61 billion
Holy
for
smokes.
the assessment roll for
Will
Marin
they
County.
finally please fix the potholes on my street? Please. I've been living with this for 3 years now. I feel like I'm in a third world country. All right.
Car that pothole.
Yeah, exactly. Okay, we're going to go. Richard Benson, Marin County Tax Assessor, thank you so much for joining
My
us.
pleasure.
All right, we're going to cut to our third and final commercial break. Again, the theme is pirate stuff. Edward Teach was better known as which famous pirate? The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouseforfun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. Edward Teach was better known as which famous pirate? Make sure to include your name and your email address. Speak slowly. Spell out your email one letter at a time. Don't touch that dial. When we come back, Mark Humph is going to get into some extremely interesting stuff that's been going on with his fund.
Well, it wasn't Captain Crunch.
Cool.
That's answer that.
Captain Hook, you went like this. It wasn't
This
Captain
has
Hook.
got to be, right?
Or Blackbeard.
It's got to be Hook.
You can do. I don't know what your schedule's like. You can stay with us if you want. Kind of hear what Mark has to say. Chime in if you want.
Stick around a little bit.
We don't have much time left.
Yeah, I really like the show. It's really a lot of fun.
Thank you. Yeah, I got. It's interesting. Our next person who's going to be on the next show. We're doing double recordings because he and I are going to be gone in a week or so. Said she goes, yeah, I listen to you guys all the time because she's a realtor and she happens to be traveling around.
Yeah, a lot of people travel around
So
on
you know the
Saturdays.
answer to your question, which we didn't quite get to, but just so you guys know,
Yeah.
the deal is for commercial property owners to figure out how to structure that transaction so they don't cross the threshold of it being a change in ownership.
Right.
Only changing less than 50%, right? So they don't go over 51, and there's
Can you do that over
mechanisms
time?
to do that. Well, it's cumulative in some
It's
things, but there are some tricks to try to figure out. So the real sophisticated property owners figure out how to beat the dealer.
Do you want to?
Too complicated.
Yeah.
It's probably a little too complicated.
We'll save that for the next time.
Plus, I don't think
it's
the
complicated.
people who are about to pay their tax bill want to
Want to
hear
hear
how
that?
Yeah.
Get away with it.
Our beating the system, right?
That's
How to
true.
play beat the dealer with your property tax.
Damn 1%ers.
Exactly. Figure this out here.
He's got to do the math to see
Yeah,
how long it's for.
yeah.
First segment.
What I'm wondering is why he doesn't have that all in an app.
There probably is one. It's so funny. We talked about that.
He's going home tonight and not Excel.
Yeah.
Because usually I take off my shoes and socks to go to county.
You just have that programmed in, plug in your time, boom, there you go.
Yeah, I
Excel
guess.
does that with time.
Oh, I should be able to.
So time, it calculates the
Yeah,
time.
based on how much was left.
Yeah, I mean, you put in 15 minutes, it'll tell you exactly how many minutes you have left, right? It does it on time. It's perfect.
You know what? I'm gonna take that into consideration.
You do a formula in it.
Yeah, exactly. Take this
Totally.
minus. Yeah, you're right. Yeah, just take
Why are
that
you doing
minus that.
Then you don't have any mistakes.
We're just finishing up our last segment on this one. Okay, ready?
Yep.
So you're going to answer your Captain Crunch. Here we go. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hoff, president of Pacific Private Money. Those were some pretty good segments we had there with Richard Benson. He's still in the studio here because he wants to hear about Mark's fund and maybe ask a couple of questions. When we went to the third commercial break, we asked this trivia question. Again, the theme is pirate stuff. Edward Teach was better known as which famous pirate?
Captain Crunch.
Captain Crunch. No, he was not a pirate. He was a good guy.
Captain Hook.
Captain Hook. No.
Blackbeard.
Yes. Blackbeard.
Third
Edward
time's a
Teach.
charm. Never
Okay.
strike out.
So, Mark, we received an email for you. It says here, what happens if a borrower in one of the loans in your fund goes bankrupt?
So we didn't talk too much about my background in my company, but for any new listeners out there, I'm broker and president of Pacific Private Money. We're based in Marin County. We're a private money lender, private money real estate lender, and we specialize in making loans to real estate investors. Why? Because after 2008, most of the banks stopped making loans to real estate investors and have focused for the last 5 years on making consumer home loans, leaving the poor real estate investor kind of out in the lurch when it comes to financing. So sprung up companies like Pacific Private Money and others to fill that void and provide much needed capital to the real estate investment community who's been busily out there buying, fixing, and flipping real estate and foreclosed properties, improving it, putting it back on the market as turnkey entry-level property. And so we've been really busy over the last 5 years making these loans. And so we, in 2013, Pacific Private Money launched a investment product for some of our investor clients, those who are providing the money that we use to make these loans. And so we launched the Pacific Private Money Fund. It's a fund that's targeting an 8% return to the fund shareholders, and we use that pool of capital to make loans to real estate investors. It's just another source of capital that we use in addition to the private individuals who fund our loans. And so we've made over 600 loans in the last 5 years. Again, mostly short-term stuff to guys buying, fixing, and flipping property. Most of those loans have been paid off. And in that 6 years, we've only had 2 go to foreclosure. So we're not talking about high-risk loans. This is not the hard money that you might remember from 10 or 15 or 20 years ago. We're not making seconds to distressed homeowners that that can't afford to make the payments or are in some kind of financial disarray. We're mostly making purchase money loans to real estate investors, again, who have a business model in mind. So the question was, if a loan goes bad, and I guess it was aimed towards the fund. So our mortgage pool fund right now has, I think it's got 21 loans in the fund. What if one of those loans went bad? What would happen? Well, first of all, if you are a private lender and you lend on a specific note secured by a deed of trust on that specific property, if that lender stops making a payment, you, the private lender, you need to go after him and file foreclosure, and you bear the expense of the foreclosure cost, and you may end up with the property, you may, whatever happens, but it's your responsibility as the individual private lender to go after that person. You might get help from the broker who helped you put it in, but generally speaking, it's your financial responsibility. Through the fund, however, what's one of the many benefits of investing in a mortgage pool fund is you still get that nice high yield, which we're paying about 8.5% right now currently. But you also don't have to take care of any of the problems, late payments. For example, foreclosure is handled by us in our office, so we have yet to actually have to file a notice of default on any of the loans in our fund. But if we did, we would file that notice of default. In fact, our office would do it. I would have one of my staff people, engage one of the companies that we use to file the notice of default. These are companies that are in business and know how to do it properly. And then we would either foreclose on the property and then do whatever needs to be done and sell it, or that person would pay the deficiency before it went to sale.
But
So
the yield wouldn't really be affected too much, at least temporarily.
well, again, one of the benefits of a mortgage pool fund is that any losses or stoppages of income, that discrepancy is spread among the entire fund. Now, the fund is growing, and as it gets larger and larger, any one loan going bad is going to have a smaller and smaller effect to where it's relatively insignificant in any one loan, assuming that we continue to do what we plan to do, which is not have any one loan in the fund be larger than a certain percentage of the total funds under management. So again, the mortgage pool fund is designed to be like a mutual fund of mortgages where we have the benefits and the protection that you get when you diversify assets over many assets.
Okay, so now I gotta have you tell the story. Now, we're not going to mention the company, we're not going to mention the name because it's confidential, but recently...
The deal of the week.
The deal of the week. Okay,
Okay.
You won't believe this, okay? We're talking about somebody who works for, I would say, a Fortune 5 company.
Mm-hmm.
Okay, so this is a very large company, and he's very high up in the company. Tell us the rest of the story.
So,
5 minutes ago.
so I've got we get a lot of referrals from mortgage brokers, and so one of my favorite mortgage brokers in the North Bay calls me and says, I have a client who is not going to be able to close the acquisition of his $1 million+ home in the North Bay on time. And I said, well, tell me about the story. He says, well, this guy makes close to $5 million a year, but the catch is that most of that money is in stock options. And so even though he still makes a very healthy W-2 cash income, it turns out that the bank that had earlier approved the loan, and now we've got a week to close, right? And the bank had already approved it. Well, they decided they were not comfortable with the fact that, although he has a very, very large portfolio of restricted stocks.
Yeah, the 144 restricted stock, so we can't sell this stock for, I think, only about 6 months.
Well, they're vesting quarterly.
Oh, quarterly.
Yeah, so on a quarterly basis, these stocks are vesting.
Love that.
And so just in the next quarter, that the amount that's vesting is not quite $1 million, but about $500,000 over the next 6 quarters.
And the funny thing is this guy, he's not buying a $10 million house. He's only
Although
buying
he
about,
probably could.
He could. He's only buying a
especially
house
when
about
these stocks fully vest.
$1,250,000 or something, and the loan you're going to provide is $860.
Right,
It's
so-
only about 70%.
Right, so it's a 70% loan, and really, I mean, these are great loans for our company. Now, sure, I feel a little bit badly that I got to quote the guy a couple of points and a 9.9 interest rate, but I mean that's kind of the going rate for private money on these type of. This is called a bridge loan, basically. Yeah. It's a way for him to close, so he doesn't lose the contract. It means the guy's got $50,000 hard on his deposit. What that means is that if he doesn't close next week, he loses that $50,000. That
and he
seller's
doesn't
not
buy
about,
the house that he wants to buy.
right, and the seller's not going to give it back to him. That doesn't happen in this market. No matter how nice we are, hey, $50,000 is $50,000, and contract's a contract. So he needs to close, and so we're gladly putting together a loan for him, and we're all set up to close. And again, this is not that uncommon, and this surprises a lot of people. And I got to think, I don't know what percentage this is of all loans. I mean, if there's 10,000 loans that close every day in California, or whatever that number is, how many loans end up being in a situation like this? Well, it's not a very large number, but it is, we probably do 2 or 3 of these loans every month where there's a last-minute glitch and the bank is not going to perform. The person's going to lose the opportunity to buy the house and may even lose their deposit. So that's kind of why we exist, and you know, among others, to serve the investor community, we can also serve the residential community in a bridge capacity when and if something like this unexpected happens.
And his FICO score is about 1,800 or
I
something.
know.
No, he's got a high 700.
This might be one of the best borrowers we've ever made a loan to.
Well, the funny
in
thing
terms
is,
of financial strength,
He could pay
income,
cash
credit
for the
score.
house. I mean, you could practically pay cash for the house, except
Sure.
that he's got the restricted stock.
Yeah.
You know, and again, it's not like you're charging him super high money. It's not like you're charging him a 10% fee and 18% interest like some people we know here. We have Richard Benson from the Marin Tax Assessors here. It's not him personally charging it, but yeah, I mean, it's high, but it's not super high because he's gonna pay it off
Private
probably in a
money
couple months.
nowadays, 2 to 3 points and 10%. I mean, it's not the horrific pricing. I mean, the first time that I remember my dad got a hard money loan like 20 years ago, it was 10 points and 12%.
Yep.
You know?
And we used to do loans 15% and 10 points.
Yeah.
There was a time.
There was a time, exactly.
But competition brings pricing down. Money has definitely become well, it's always been a commodity, but it's really a commodity now, even in the private money sector, formerly known as the hard money sector. Yes, so 10 points. I mean, so 10%, 2 points, not an unreasonable price for basically a very, very quick closing.
How do people get a hold of you?
So Pacific Private Money, we can be reached at 415-883-2150, or go to our website, which is pacificprivatemoney.com. That's our borrower website. If you want to find more information about our fund, go to our fund's website. We just launched it a couple months ago. It's pacificmoneyfund.com.
Great. Thanks. And Richard Benson, Marin County Tax Assessor, thank you very much for joining us in the studio. Here's our thoughts for the day. In 1998, Serena and Venus Williams said they could beat any man ranked 200 or worse in a game of tennis. So a gentleman named Karsten Brash, ranked 203, accepted the challenge and easily beat them 6-1, 6-2. Oops. And there is a sport called bonsai skydiving. You throw the parachute out of the plane first and then jump after it. That sounds like fun, huh? Mark, I signed you up.
No.
So if you're still here next week, tune in next week to The Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long. That's a wrap.